Viewers across the globe, good morning and win today. This is your business partner, Fred Ntambise Sanga. So in today's sharing, I'm going to discuss about cryptocurrencies. So we are going to get to know what really cryptocurrencies are. But it may not be easy for someone to understand what really cryptocurrencies are unless you get to know the evolution of money. So allow me to first take you through the evolution of money. You know, you cannot understand cryptocurrency unless you understand the evolution of money. Money has evolved from barter trade to gold to coins to paper money to plastic cards to electronic money and now to cryptocurrencies, as we are going to see. Just bear with me, guys. We do believe that crypto has become widely popular and will get more popular with time as the proper education and awareness has grown around the world. So around the world, people are getting familiar with the advantage of blockchain technology and cryptocurrencies in particular. So back in the days, in the absence of money, how did people used to transact? How did people used to purchase commodities? One, they used what we call the barter trade system, as you're seeing on your screen. In the absence of money, people used to use the barter system to trade goods and services. So the example, my grandfather is having a cow and he needs a bicycle. So what my grandfather is going to do is going to exchange his cow with someone who has a bicycle. My father is going to give out his cow, then he is going to be given a bicycle. So that is how this system used to work. But people realized that this system involved cheating. So this one is self-explanatory. If you sit down and you calculate, a cow is more valuable than a bicycle. So later, people came up with another idea. Then commodity money was introduced since barter trade was not convenient. Commodity money was introduced. The first form of currency was commodity money, where valuable items like shells, beads, and precious metals were used as currencies. So later, we went to the coinage era. Coins were introduced. The introduction of coins made trade easier and more efficient. Coins were made of gold, silver, and bronze and were used in many parts of the world. So this era, people get to know that this system made trade easier, but it also had its problem as inflation was seen. This system was faced by a problem of inflation, as the coins that were in circulation were more than the coins that were being made. So then later, paper money was introduced. Paper money was first used in China during the Tang Dynasty. It later spread to Europe and other parts of the world. Then later, banknotes were introduced. Banknotes were introduced as a more convenient way to use paper money. They were initially used by banks and could be exchanged for gold or silver. So that is it. Then later, electronic money was introduced. The rise of electronic banking and the internet has led to the creation of electronic money which is used for online transactions and digital payments. So today, this is the method of payment that many people are using across the world. So here comes in a generation or the evolution of cryptocurrency. So this is where my emphasis is. Cryptocurrencies. Bitcoin was the first cryptocurrency to be introduced, and it was introduced in 2009. Cryptocurrencies are digital assets that use encryption techniques to regulate the generation of units and verify transactions. So as you're seeing on your screen, that is the evolution of money from barter trade to silver, the coinage, paper money, banknotes, electronic money, now to cryptocurrencies. Why cryptocurrencies? This is where my main emphasis is. Why cryptocurrency? So bear with me, guys. So I'm going to compare the fiat money. I'm going to compare the fiat money. That is the fiat money, the money that we are all using today, and cryptocurrency. As you're seeing on your screen. So when it comes to paper money or the fiat money, it's infinity in supply. It can be printed in big number, which is not the case with Bitcoin or the cryptocurrency. It has a limited supply. You cannot just come from nowhere, then you say that I have created my Bitcoin or I have created my cryptocurrency. That is not the case. Then paper money, it is controlled by the government. Paper money is controlled by the government. That is not the case with cryptocurrency. They are not controlled by banks. When it comes to paper money, you must trust government. So assume, let's say, the bank one day, your bank or the bank in your country, the government in your country, one day comes out and say, now we have changed the appearance of this money, of this note. No way you're going to say that it will not work out. There is no way you're going to fight the government. So, and that is not the case with cryptocurrency. No trust required. Days to transact. Bitcoin does not require days to transact. Instant payment is made. Then fiat money, it is centralized. It is controlled by the government. Then cryptocurrency is controlled by the people. No one owns Bitcoin. So when it comes to sending Bitcoin, so it's like we are comparing in this case. Now just imagine this is you guys. If you're to send money to someone who is in Europe, just assume you're in Africa and you want to send money to someone who is in Europe, or let's say America. So that means you only need to get your phone, then you send instantly to his phone. So that is how cryptocurrency works. It is safe, secure, and instantly. So when it comes to sending fiat money, you first need to go to your bank. You use the Visa cards, the ATM, Western Union. All this, it is a big process. Then it is going to go to the recipient's bank before it reaches him. So that is how simple transacting cryptocurrencies is. So with those few remarks, guys, allow me to come to the end of today's sharing. Don't forget to subscribe on my YouTube channel, to comment. You can even share the video. I remain as your business partner, Fred Ntambi Sesanga, and I sign out.